Hello XRP community. We begin with breaking headlines from the U.S. banking sector. J.P. Morgan, the largest bank in the United States, has just confirmed on CNBC that it will allow clients to trade Bitcoin, XRP, and other cryptocurrencies. The move marks a major shift for a bank long known for its skepticism toward digital assets, signaling that institutional integration is accelerating faster than most expected. The announcement came with one key clarification: J.P. Morgan will not immediately launch its own custody services. Instead, it will rely on regulated providers already established in the U.S., including Ripple's standard custody platform, a name familiar to those following institutional adoption. The timing is remarkable. Only days after the sharp market correction on October 10, J.P. Morgan stepped forward with this confirmation, suggesting preparation behind the scenes while public sentiment remained cautious. For years, the bank's executives described cryptocurrencies as speculative and risky. Now, its own clients will be able to access XRP and Bitcoin directly through its systems, marking a turning point in Wall Street's relationship with blockchain finance. Adding weight to this shift, J.P. Morgan is set to join Ripple's flagship annual event, Ripple Swell, in New York this November. Scott Lucas, the bank's head of digital assets, will appear as a featured speaker. His participation underscores how traditional banking giants are now openly collaborating with blockchain firms they once viewed as competition. The story deepens when you look at what J.P. Morgan has already said publicly about Ripple. In recent internal research cited by CNBC, the bank described Ripple's technology as a potential disruptor in global payments and identified XRP as the most attractive digital asset for financial institutions. That's the largest U.S. bank recognizing Ripple as a viable alternative to the SWIFT messaging system, a statement that carries enormous implications for global finance. Meanwhile, BlackRock CEO Larry Fink, whose firm manages over $12 trillion, reiterated that cryptocurrencies are here to stay, comparing their role to that of gold. He recently noted that tokenization of real-world assets, including projects associated with Ripple, could redefine how capital markets function. All this aligns with what we've been reporting for months: the quiet integration of distributed ledger technology across traditional financial rails. Ripple's network already interfaces with systems used by Visa Direct, Mastercard Send, and American Express FX. Internal testing documents show these firms using Ripple's DLT infrastructure to process cross-border payments in real time. One such file lists Ripple alongside Stellar, Santander, and other financial players in ongoing pilot programs. The goal is clear: faster, transparent, and interoperable payments using ISO 20022 messaging standards and blockchain settlement layers. Ripple's on-demand liquidity solution, powered by XRP, is designed to unlock trapped capital sitting in Nostrovostro accounts held by banks worldwide. By converting those idle reserves into active liquidity, Ripple offers institutions a tool to move value instantly and efficiently. Looking ahead, November could be the decisive month for utility-driven adoption. As ISO 20022 integration reaches full implementation, global payment systems will gradually transition from testing to actual usage of blockchain rails. That transition marks a critical step away from speculation toward real-world functionality, where tokens like XRP begin to serve a tangible purpose inside regulated finance. It's worth noting the pattern. After every major downturn, institutional players step in, first to criticize, then to accumulate, and finally to integrate. 3 days after the October 10 correction, J.P. Morgan announces client access to XRP. BlackRock praises tokenization. American Express and Visa appear in blockchain pilot documents. The sequence suggests strategy, not coincidence. Before we close, here's what is confirmed today. J.P. Morgan has officially confirmed it will allow clients to trade Bitcoin, XRP, and other cryptocurrencies. The bank will not provide custody services directly but will rely on external partners, including Ripple-affiliated providers. Ripple Swell will host J.P. Morgan's head of digital assets next month in New York. BlackRock CEO reaffirmed the strategic role of digital assets alongside gold. And documents reviewed this week continue to show Ripple technology being tested by major global payment networks. What's your take? Is this the true beginning of large-scale institutional adoption, or just the prelude? Share your view in the comments, and we'll feature community opinions in our next market update. Thanks for watching. We'll be back with more verified headlines on XRP, Ripple, and the new financial system taking shape around them.